Hello. Hope you all are doing really well. I am CA Supreet Agrawal, your faculty for ACCA AA and AAA subjects. My friends, today we are going to have the last part of our revision session for AAA December 2025 attempt. So please confirm on the chat box if I am audible and visible clearly or not. First of all, let's quickly check that so that we can proceed. Hope you are doing really well. Okay, I can see that I am audible and visible clearly, so that's great. Just in case if you face any trouble, please do let me know in the comment section. Okay, so in the first two sessions what we have covered so far, let us have a quick discussion about that what all things we have already covered. Okay, so we have covered all the important chapters that majorly frames part of our question paper. Say we have covered about the frameworks. Okay, we have covered money laundering, we have covered money laundering, we have covered planning, materiality, risks, then we have also covered audit evidences majorly, we have also covered the completion stage, reporting stage as well. Plus we have taken care of other important topics as well in the first two sessions, that is day 1 and day 3. Today is a day 1 and day 2. Today is a day 3. Okay, in this day 3 we have to cover all the remaining topics that are included in AAA syllabus. Might not directly be asked in the examination, but will definitely help you frame better answers in the examination. Okay, so did we cover ISA 200 series? Yes, we have already covered it. Did we cover 300 series? Yes, we already covered it. Did we cover 400 series? Yes, we already covered it. Did we cover 500 series? Yes, external confirmations, everything we have covered, right, till written representations. Did we cover 600 series? So yes, we have covered major part of it, which is the group audit, but there are other standards also which we will be covering today. So this is our strategy for today. And did we cover 700 series also? Yes, we have covered 700 series in full as well, right? So today, if we talk about the standards, then only one or two standards are going to be covered today, which is from ISA 600 series, 610, 620, that's it. Other than that, we are going to cover all the topics that do not have direct linking to the standards. However, there could be some linking to ISQM 1 as well and ISA 220 as well, which is related to quality management. So these three standards could be there, which we might be covering today, and other than that, then ISRE could be there, right? So other than ISS, then ISRE could be there, 2400, 2410 and all of that. Okay, so we are going to cover this part of the syllabus today. I hope you are clear on the covering part. Yes, so what all things we are going to cover, are you I hope you are clear on that. Any discussion that is required over here? Any discussion that is required over here? I hope not, right? Now what all chapters we are going to cover today? So we are going to go for quality management, professional appointments, then audit procedures and evidences, then using the work of others, then communicating with TCWG, audit related and assurance services, review engagements and related services, prospective financial information, forensic audits, sustainability information and audit in public sector. These are the chapters that we are going to cover today, but the source is going to be the pocket notes. Okay, so what I have done is I have created certain pocket notes for you, because these chapters might not be directly relevant for your examination for a bigger question, right? But this might frame some part of the question. Okay, or this might help you in framing your answers for the bigger aspects in a little better manner. So what I have done is I have identified all the key pointers of these chapters and created the pocket notes for you. Okay, so what all things you should do? You should cover these chapters through these pocket notes. Then you should go for the ACC study hub reading or the reference material study. If you have any reference material, you can read that also. And then if you have any questions, please feel free to reach out to me. Okay, so the path is very clear. What you need to follow? First of all, you need to understand this session. Okay, so attend the session. Okay, then what you need to do? Then you need to read study hub. Then you need to read study hub or your relevant reference materials. Then if you have any queries, discuss queries and then solve questions. That should be your strategy for these chapters. Okay, I hope that is clear. Okay, so now quality management. My friends, we have already discussed in detail about the quality management, that how auditor maintains the quality. We have had a detailed discussion about it during our acceptance procedures, during other procedures as well. However, in this particular chapter, what you need to understand in particular here is that whenever we discuss about the quality, what should be very, very important over here is that there are two types of quality management procedure that should be applied, one at the firm level, another one at the engagement level. Okay, firm level and engagement level. When I talk about the firm level, when I talk about the quality management procedure at the firm level, then these are majorly taken care of by the central person, with the highest authority of the firm, say the CEO of the firm or the managing partner of the firm. Okay, whereas when we talk about the engagement level quality management, this is majorly being taken care of by the engagement partner. So that is the first thing that you should note over here, that firm level engagement taken care by MD or CEO of the firm. Okay, whereas engagement level taken care by or responsibility by engagement partner. Okay, although the components are similar, the scope and the applicability is very, very different. But before that, I hope you remember from our regular classes that we discussed all of that into Heal Me. You remember we discussed the components through Heal Me. Now what is this Heal Me? Heal Me with quality. You remember we discussed it like this. We created a mnemonic, Heal Me with quality, so that we remember that it is for quality management. It is the component for quality management. Heal Me. H stands for what? So we said that this should not be engagement resources, this should be human resources. So H. Okay, although the technical name is engagement resources only, but what we say, human resources, so that we can remember H. Then E stands for engagement performance. Then A stands for acceptance and continuance. We will understand the meanings also, don't worry about it, but I'm just giving you a rough idea about it. Then L stands for leadership, M stands for monitoring, and again E stands for ethical requirements. That is, if you have quality over these procedures of your firm or your engagement, then you will be said to have a quality management procedure in your firm or the relevant engagement as well. Okay, now let me explain it to you in a little more detailed manner. Okay, so if I say human resources, that is, or engagement resources, that is, do you have the sufficient resources to conduct the engagement or not? Okay, do you have the sufficient resources to conduct the engagement or not, and whether those resources are of the appropriate quality or not. For example, if you want to conduct an engagement of, say, US GAAP, okay, so you have to sign any report following the US GAAP standards. Do you have the relevant resources or not? And if you have the relevant resources, then whether they are appropriately available for the engagement or not. So that is engagement resources. Then engagement performance, that is, whenever we talk about engagement or the firm level, that is whether there's a system of measuring, evaluating, and giving a quick feedback on the performance or not. So engagement resources, whether resources are appropriately available or not. Okay, then when I talk about performance, then what is the meaning of this word engagement performance? That is, whether there's a system of measuring and evaluating performance or not. Then third one, whether there is a good quality management system over the acceptance and continuance of a client or not. That is, whether there is a system to identify and evaluate, independence and other acceptance issues or not. Okay, then governance and leadership, that is whether the leadership of the company or the firm is appropriate or not. If we talk about the firm level, then whether the relevant leader of the firm is appropriate or not. And when we talk about the engagement, whether the engagement partner is sufficiently qualified, competent, and experienced or not. That is, whether the leader of the firm or engagement partner, whether the leader of the firm or engagement partner is competent, objective or not, competent and objective or not. Okay, then monitoring, generally monitoring should be kept at last, but why we have kept it in the middle? To make that mnemonic, which is heal me. Okay, now ethical requirements, whether there's a system, whether there's a system for identifying ethical threats and breaches or not. That is whether relevant individuals of the firm are taking active efforts towards identifying ethical breaches or not. Okay, now at the end, monitoring, that is whether all these functions are appropriately working or not. Okay, so this is something that you should remember for the quality management. This is driven by ISQM 1 as well as it is driven by ISA 220. Okay, now there's one particular thing which is driven by ISQM 2, which is EQCR. What is EQCR? EQCR stands for engagement quality control reviewer. I thought that somebody has, yes, there is a message. Where could we find these notes? So you can find this on my Telegram channel. The link has been mentioned in the description box. You can go to that Telegram channel and drop a message. We will be sharing the notes over there. Okay, now engagement quality control review. Okay, now this is mandatory for listed entities, like we have discussed. This is mandatory for listed entities and it is also preferred for high risk audits also, although not mandatory for high risk audits, but it is preferred. Okay, I hope this is clear. Yes. Now there is a particular thing which is documentation of quality management policies is must. That is, whatever policies you have regarding the quality management, that is, be it at the firm level, be it at the engagement level, whatever are your policies, you should have a documentation, a ready to refer documentation for the purpose of evaluating that whether your quality management purposes or quality management policies are existing and working appropriately or not. Okay, so with this we have covered all the important pointers of this particular chapter, which is quality management. Now what you should do, you should read the ACC study hub and the reference materials. Whatever reference materials you have, you can read it. It should just be updated. And then if you have any queries, if you are feeling trouble in understanding any of the concepts written over there, or anything that you might be having a query with, please feel free to share with me on the Telegram. I would be happy to answer you as well. Okay, I hope this is clear. Yes, if there are any queries, please feel free to let me know. I am reading your chat box only. Yes, please let me know if there are any queries. Please feel free to tell me. Okay, I think there are no queries. Thank you so much. Okay, let's move further now. Okay, so with this, I'm not saying that we have covered all the pointers, but we have covered all the important pointers of this chapters. Now you just need to give it a read and you will be ready for the examination also. Okay, now professional appointments. When I talk about professional appointments, what do I mean by it? Okay, when I talk about professional appointments, so this majorly talks about the appointment stage. This majorly talks about the removal, resignation stage also. Okay, so we all know about one concept called engagement letter, right? Engagement letter. We all know about this particular concept called engagement letter, which is driven by ISA 210, agreeing the terms of audit engagement, right? Where we define the scope of the audit engagement, where we define that what all are the roles and responsibilities. So these all topics are majorly taken care of in the AA syllabus also, and it is almost similarly covered in AAA also. Okay, there's no major change between AA and AAA for these concepts that we are going to cover today. Okay, for all major of the topics. Now when we talk about engagement letter has what? Engagement letter has the scope and timelines of the audit, nature, timing and extent of the audit. It also talks about the form and content of the report. So all of these things we are going to cover here. Then this chapter is going to talk about the appointment. Who appoints the auditor? Who appoints the auditor? So auditor is appointed. Appointment of auditor is done by shareholders, but it can be recommended by audit, or let's write it this way, by audit committee or board of directors. Can auditor be removed? Yes. Can auditor resign? Yes. However, there are particular instances and circumstances for that, right? Which we majorly cover under AA syllabus also. Now, let's talk about what all are the important pointers of this chapter. Evaluate following before acceptance. That is, before you accept any of the audit engagement, you should evaluate the following parameters. Before you accept any of the audit engagement, you should evaluate the following parameters. That is, whether the management has integrity or not. That is, whether the management has integrity or not. Now, how can you evaluate that? So you can refer the previous year's auditors report also. You can refer the market reputation also. So previous year auditors report, for example, if management has not given the written representation to the previous auditor, it might mean that they do not have integrity. Or market reputation also, you can evaluate the market reputation also. That is also very, very important over here. Then competence and resources. Competence and resources, whether audit firm has the appropriate resources and competency to perform the engagement. That is, for example, if engagement is talking about US gaps and you do not have any knowledge of US GAAP, then whether you will be able to perform? No. So that is why it is very, very important that whether you have the competency and whether you have the resources. Even if you have the competency, whether you have the resources, time and resources to invest in that particular engagement and perform the engagement. Then independence check. That is, whether auditor, audit team, I'm using all words, okay, auditor, audit team, or whether auditor, audit team, or audit firm is independent of the client or not. Okay, this is very, very important. Then ethical consideration. When I say ethical consideration, what do I mean by it? That is, whether there is any threat to independence or not. Whether there is any threat to independence or not. Then preconditions for audit. Now, what is a precondition for the audit? So there should be acceptability of preconditions of audit, right? What is precondition of an audit? Acceptability of AFRF. That is, whether acceptability of AFRF is there or not. What is AFRF? Applicable Financial Reporting Framework. Acceptability of AFRF, that is, whether whatever AFRF needs to be followed, whether that is acceptable to the auditor or not. For example, in India, there is one company which requires the audit to be conducted as per Japanese GAAP. Okay, now you have the relevant resources, relevant engagement, relevant competence also, but whether you accept to conduct the audit as per the relevant AFRF, which is Japanese GAAP in this case. If you accept, then there is acceptability of AFRF, and that is precondition for an audit. That is, this should be acceptable to the auditor. Only then the engagement would be considered as appropriate. Okay, I hope this is clear. Now, communication with previous auditor. When I say communication with previous auditor, what do I mean by it? Communication with previous auditor. We have already discussed about NOC procedures, right? That you need to communicate with the previous auditor. However, if auditor does not respond, then you need to send the reminders. And if the reminders are also not taken care of, then you can perform the alternative procedures and accept the engagement, right? So communicate generally before acceptance. To discuss about any issues with the engagement, and whether any unpaid fees is there or not, right? That needs to be understood from the previous auditor. This is also called as, that is NOC procedure, no objection certificate procedures needs to be conducted. I hope this is clear. I hope this is clear. Okay, now engagement letter which we talk about under ISA 210. Engagement letter should include what? We have discussed engagement letter is a formal communication, formal agreement between the client and the auditor, that what are the scope, timelines, nature, everything about the audit, right? So it should include what? It should include objective and scope. This question could be asked. It should include objective and scope. It should be clear with the auditor's responsibilities. It should have a clear paragraph of what are the auditor's responsibilities. Say to obtain reasonable assurance whether financial statements as a whole are free from material misstatement whether due to fraud or error. And management's responsibilities, say management is responsible for the preparation and presentation of the financial statements. Management would take care of providing all the evidences, access to all the relevant person within the organization to the auditor. What is the AFRF, which is applicable financial reporting framework? What is AFRF? That is applicable financial reporting framework. That is also very, very important. And expected form and content of report. When I talk about expected form and content of report, that is how the report would look. Say you do not need to mention the client's name, you will just share a sample report. That is sample report needs to be shared. I hope this is clear. Now, on resignation or removal of whom? Of the auditor. Evaluate if statutory rights exist, that is if they have removed it, whether they have the legal rights. If you have resigned, whether there are legal rights. For example, there might be certain reasons or certain cases where you are not allowed to resign. For example, there's a standard practice across the globe that if you have signed the review engagement for say 3 quarters, then you will have to complete the annual report also, or annual audit report also. Okay, so that is important. Duty to report circumstances exist or not? Duty to report circumstances to whom? To management or relevant people, and communicate with regulator or ACCA body if required. So this is something that becomes very, very important, and this we have covered in the regular classes also. Right. Now, audit procedures and evidences. This is something that we usually cover under basics of audit, right? But the chapter contains it, so I am revising it. Okay, so there are multiple types of procedures, but we generally remember it through ICAI ORR, right? I stands for inquiry, C stands for confirmation, A stands for analytical procedure, I stands for inspection, O stands for observation, R stands for recalculation, and again R stands for reperformance. I hope this is clear, right? Inquiry as in asking questions, right? Inquiry as in asking questions. Okay, then confirmation. If you have any queries, please feel free to write. Okay, I would be happy to take up those queries as well. No worries, you can start writing, not an issue. Okay, confirmation as in what? When you obtain a direct written confirmation, that we have covered in day 2, right? ISA 505. Then analytical procedure, this we discussed in the ISA 520. Analytical procedure, these are performed at 3 stages: the initial stage, the planning stage, the execution stage, and the completion stage. 3 stages, right? Inspection, that is inspection of documents. But whenever you write answers for inspection of documents, what you have to be very, very clear with is that you have to mention that what thing you will mention, what particular thing you will be inspecting under that document. Say, you cannot just say that we will obtain the agreement and verify it. What you will verify under the agreement? The name of the signer, the name of the person, whether they were authorized to sign or not, right? Then you will be verifying the tenure of the agreement. For the invoice, you might verify invoice number, invoice date, quantity, price, rate charged of GST or any other taxation, right? Observation, this is generally performed at the stock counts. When I talk about the observation stage, this is majorly performed at the stock counts. That is, management would be performing their work and you will be observing whether they are performing it with the best of their capabilities or not, or with the relevant requirement or not. Recalculation, that is when you try to recalculate the mathematical accuracy of an equation. Say you try to recalculate the depreciation, you try to recalculate the impairment amount, right? Just recalculation, no judgment required over there, just the recalculation part. Reperformance, when you try to reperform any task. Say this is generally done at the time of test of controls, at the time of walkthrough of the process. Then let's talk about assertions. What are assertions? So these are the criteria against which a subject matter is evaluated. I'll write it: criteria against which a subject matter is evaluated. Now let me explain this. This might help you in writing a lot of answers, okay? And this is something that I generally receive a lot of queries for. So let me explain how we will be covering this, okay? I hope you have some patience over here, okay? And let's try to understand this, okay? Now let me explain this. If you have to audit, say, property, plant and equipment, okay, it has been asked in your examination that draft the audit procedure for the purpose of property, plant and equipment. How you will do it? Can you tell me how you will audit property, plant and equipment? Procedures. Anybody on the chat box? Can you tell me? Can you tell me what all procedures you will perform to audit property, plant and equipment? What all procedures you will perform to audit property, plant and equipment? Yes, anybody? What are procedures you will perform to audit property, plant and equipment? Anybody? I would be happy to receive the answers. Please feel free to comment. Not an issue. Yes. Please tell me. Okay, understood. Now, see, a lot of students, whenever I discuss with the students, a lot of students says that what we will be doing is we will be obtaining the invoice and verifying it. We will be going and checking whether the asset exists or not, right? But these are very generalized answers. See, this whole chapter contains a lot of items of financial statements for which you have to apply the procedures. So what I'm going to do is I'm going to give you one medicine fits all kind of solution, okay? What I'm going to do is I'm going to tell you how do you need to write answers for your audit procedures, be it AA paper, be it AAA paper. This is applicable for everybody, okay? However, we are studying for AAA, right? Now I'll tell you one thing, okay? See, whenever you have to write the answers for any of the audit procedure, it could be property, plant and equipment, it could be trade papers, it could be anything, okay? What you need to see is you need to address the assertions. So here, let me write the assertions. Say, property, plant and equipment is a balance sheet item. So existence is important here, not occurrence, existence, right? Then valuation is important over here, not measurement, right? Then rights and obligations are there, Then there is presentation and disclosure, Then there is completeness, then there is accuracy, and then there is cutoff, right? So what you need to check is, see, this might be applied differently in different situations, but I'm just giving you a good idea about how you need to apply it, okay? So for the existence part, perform physical verification. That should be the word that you should use. Perform physical verification. Perform physical verification of all the assets. I'm writing in short over here, but I'll speak. Perform physical verification of all the assets to evaluate whether all the assets mentioned in the fixed asset register of the company and the balance sheet of the company whether really exist or not, right? Then valuation. Inspect supporting documents and rationale for additions during the period. When I say rational, what do I mean by it? When I say rational, what do I mean by it? When I say rational, what do I mean by it? When I say rational, what do I mean by it? Rational as in IAS 16, you study that all costs which are incurred to make the asset ready for intended use, that should be capitalized, right? So inspect supporting documents and rational, that is, you have to evaluate that whatever costs were incurred to make the asset ready for intended use, whether they have been capitalized or not. You can also evaluate it as that whatever cost has been capitalized, whether whatever cost has been capitalized, that is whatever cost has been added to the cost of the asset, whether they were incurred to make the asset ready for intended use. Okay, then rights and obligation, whether or not whether, verify, auditor will verify, we are writing the audit procedures, right, not the question. Verify that the title deeds are, that is the original documents, the title deeds, ownership documents, the title deeds and invoices are in the client's name or not, right, that is important. Then presentation and disclosure, when I say presentation and disclosure, what do I mean by it? Whether relevant, verify whether relevant disclosures have been given or not, whether relevant disclosures have been given or not. Completeness, how will you verify completeness? So total of FAR, fixed asset register, versus balance sheet, total of FAR versus total of PP&E in balance sheet, that should match, that should be the ideal process. Other than that, you can have other processes as well. Accuracy, whether accounting adjustments are done appropriately or not. Then cutoff, when I talk about cutoff, whether all the assets that have been added in the relevant period has been taken care of or not. For example, if there is an asset which has been received or which has been purchased after say 31st March, in this case the reporting date, it has been purchased on 1st April, okay, although the delivery got received on say 31st March only, but it got purchased, the ownership got transferred, the control got transferred on say 1st of April, then whether that should be included? No, that should be treated like asset held for third party, right? So cutoff, whether all the assets purchased, not assets, the PPE, right, whether all the PP&E purchased under the relevant period is considered or not. I hope this is clear. So this gives you an idea about how do you need to frame your answers. Similarly, if there was a question on say trade payables or trade receivables or inventory, so what you need to do, you need to write all the assertions and then you have to draft the audit procedures for all assertions. Once you do that, you will be very sorted on this part. I hope this is clear. So what all are the assertions? Existence and occurrence. Occurrence is for P&L items. So existence for balance sheet, occurrence for statement of profit and loss. Measurement for statement of profit and loss, valuation is for balance sheet, right? Similarly, rights and obligations, this is for balance sheet as well as SPL. Completeness, this is relevant for both balance sheet and SPL. Similarly, presentation and disclosure, now again this is relevant for balance sheet as well as SPL, and similarly accuracy and cutoff, both are relevant for balance sheet as well as SPL. I hope this is clear. Any questions, please feel free to ask. Not an issue. Okay, I hope this is clear. We have covered almost a lot of points. Now we will be covering one more, which is using the work of others. Okay, this is work. Okay, this is work. Okay, using the work of others, this we will be completing, and then we will be taking a short break as well. Do not worry about that. Okay, I hope this is clear. I hope this is clear. Yes. Now, using the work of others. When I say using the work of others, what do I mean by it? When I say using the work of others, what do you mean by it? Say, my friends, work of others means that you are doing your external audit work, but there are certain other people who are involved which are not from your firm. So, for example, I'll give you just one idea. Okay, in one of my cases, what has happened is that we were performing one audit engagement. Okay, in that particular engagement, I noticed that the inventory was of oil. Okay, the inventory was of oil. Now, in all of our team, there was no expert. In fact, in my whole firm also, there was no expert who could tell me with reasonable accuracy that what is the quantity of this inventory. Okay, so we were only able to verify the records, but we were not able to understand that what is the actual amount of inventory that is lying over that pipeline. Okay, so what we did is, instead of just stopping over there or just relying on the documents, we hired one expert. Okay, this particular expert was the petrochemical engineer. Okay, this person came, he used to have a consultancy. Okay, consultancy firm. That person came, that person verified that what is the amount of inventory, or what is the quality, quantity, and what should be the relevant value, expected value of this particular inventory, and submitted as a report. Now we relied on the report of this particular expert who has all the relevant qualification and experience, and we evaluated that okay, this should be the amount of inventory, this should be the amount of quality, and that is how we took the judgment on what should be the value of the inventory as well. Also, we referred the evaluation that was submitted by that particular person, but that was not according to the accounting adjustments, so we did the relevant adjustments, and then we realized that okay, this should be the amount of the inventory that should be taken in the balance sheet. Okay, now in that particular case, what was that person? Was that consultant? Was that just a person who helped us in the audit, or helper? No, that person was considered as the expert. Okay, so generally, who is an expert? Using the work of others could mean expert, which could be management's expert and auditors experts as well. And this also means, others means component auditor. Okay, now this is something that we cover in group audit, that we have already covered in day 2 revision, right? Group audit, this is something that we have already covered, group audit, right? Now when I talk about the expert, so this management expert and auditors experts are considered under this particular thing, this particular chapter. Now when I say expert, what do I mean by it? When I say expert, what do I mean by it? When I say expert, what do I mean by it? Let me tell you. Okay, in a very brief manner, let me tell you what do I mean by this expert. Okay, this expert has any person who has expertise, any individual. This definition might be important. Okay, so it could be an individual or a firm who has expertise other than accounting, who has expertise over anything other than accounting or auditing knowledge. That is, any person who has expertise over anything other than accounting or auditing knowledge, that would be considered as an expert. My friends, this particular definition says accounting or auditing. This does not cover whole of finance. So for example, if there is an expert who is helping us measure the value of a particular derivative, a hedge fund, an investment in certain hedge products, right? And if we are taking expert, because we as chartered accountants or ACCAs might not be able to verify what is the valuation or what should be the valuation of that particular product. So we generally take help from other people also who are from the finance domain only, might be chartered accountants, might be ACCAs only. But the only concern is that they are operating in that particular field which could help us to evaluate the valuation of that. So that person would also be considered as an expert only. I hope this is clear. We are going very slow so that you understand everything. This is not a revision class. This is a full-fledged class that we are trying to understand everything over here. Okay, for all the important pointers of these chapters. Okay, so then it is divided under internal auditors, then it is divided under experts. This experts includes managements as well as auditors experts. managements as well as auditors experts. Okay, and this also includes the competent auditors also. For simplification purposes, let me write over there that internal auditor is also covered so that you do not get confused. Okay, I hope this is clear. I hope this is clear. Now, when we talk about using the work of any of the expert, first try to understand what are the risks associated with it. Okay, when we try to understand or when we try to evaluate the work of any person, it could be an internal auditor, it could be the auditors expert, it could be the management expert, it could be anybody. Okay, please try to understand that what are the risks over here. See, that person is the outside person. Okay, even if we are using certain information that has been submitted by them, if tomorrow anything goes wrong, then the review responsibility is with us. Okay, the principal auditor, the core auditor, the central auditor, the independent auditor, the external auditor continues to be responsible, right? So that is very, very important. So we continue to be responsible. So we should have certain procedures, we should perform certain review of that particular person. Okay, however, if we were able to evaluate the work of that particular person, if we were aware about that particular work, then we would have done it ourselves only, right? Why we would have relied on somebody else's report? But the only concern is that in this particular case, I am not asking you that you should evaluate the work of that particular person. What you should do is you should evaluate whether that person is competent enough to do the work or not, whether that person in general is objective of the independent engagement or not, that is whether they are not dependent on the engagement, right? Whether they are the relevant capacity and resources to perform the work or not, right? That is very, very important. Once you are sorted on that, then you can say that whatever assumptions they have taken, we will just verify that whether the assumptions taken by them are appropriate, are reasonable or not. And once everything is reasonable, everything seems independent and reasonable, then you have the opportunity, or then you have the ability, or then you are allowed to rely on the work of that particular expert. But what you should evaluate as an auditor, whether they are objective or not, whether they are independent or not, whether they have the relevant competency or not to perform this particular task. Once you have verified that, once you have obtained evidences over that, then you are very, very sorted on other parts. I hope this is clear. I hope this is clear. I hope this is clear. Yes, I hope this is clear. Do not worry about that. We will be taking a short break. Okay, we will be taking a break just after we complete this particular chapter. Okay, then we will be taking a 10 minutes break, then we will be moving further. I understand that once you try to understand all of these concepts together, it becomes a little heavy for you in the audit subject. So don't worry, we will be taking a 10 minutes break. Don't worry, but please bear with me for next 5 to 7 minutes. Okay, then we will be taking a 10 minutes break, and then we will be moving further for the other chapters. Okay. Now, using the work of others. So this others could include internal auditors, this other could include experts. Experts could be in the form of management expert or auditors expert, and then we complete the component auditor also. Now, when we talk about internal auditors, I have few questions over here. Okay, when I talk about internal auditors, do you think that in case of internal audit, we can use the work of the internal auditor directly? So yes, you can use the work of internal auditors also, but you can only use the work of internal auditor for the areas where you will be responsible. That is, you will be responsible even for the work done by the internal auditor. Can you use internal auditor directly? Can you use internal auditor, not just the work of internal auditor? Can you use the internal auditor also? Can you take direct assistance from the auditor? Yes, you can take the direct assistance from the internal auditor as well, but you can only take it for areas which has lesser professional judgment and which has lesser risk. That is, you cannot take it for areas where there is higher level of professional judgment involved or professional or risk involved, right? Now, whenever you try to use the work of internal auditor, because they might have also done certain audit work, you might have also done certain audit work, there could be duplication. Whenever you try to use the work of the internal auditor, what you should do? You should evaluate objectivity, that is, whether IA, that is internal auditor, are unbiased or not, right? Competence, whether IA has relevant knowledge, skills and experience to act as IA or not, then approach, whether the overall approach followed by internal auditor is as per the requirements or not, as per the requirements or not, as per the requirements or not. I hope this is clear. Now, cannot provide direct assistance in listed or PI audits. That is, what is direct assistance? That is whether they are directly working under the external auditor. Can they do so? Yes, but cannot provide for listed or PI audits. For others allowed, if allowed for lesser, allowed for areas with less judgment and risk involved. I hope this is clear. Now, use their work only for low risk or low judgment areas like we have discussed. So we should use their work or use them as a direct assistance only for the areas which has lesser amount of professional judgment and lesser audit risk as well. I hope this is clear. Now, experts. Whenever we talk about the experts, what you have to evaluate over here? Objectivity, competence and approach. But here you will be evaluating competence, capability and objectivity. Almost the same thing. Only thing is here you will be verifying the approach also. Here you will not be verifying the approach. Why not approach? Because we are not the experts of it. Why not approach? Why not approach? Because we are not the experts of it. I hope this is clear. Evaluate competence, capability and objectivity. Then agree scope, methods and assumptions. When I say competency, it means knowledge, skills and experience. Then capability. When I say capability, whether they are able to, similar to competence. Objectivity, unbiased, right? Then agree scope as in what all things are covered, that is driven by scope. Then methods, techniques and approaches. Assumptions, that is a clear English word. Assumption, that is whatever assumptions you have taken, whatever predetermined criteria you have considered, whatever evaluations you have done, pre-decided evaluations you have done, that is called as the assumptions. So whatever assumptions they have taken, for example, I will give you one example. Discount rate for gratuity. Discount rate for gratuity. So for gratuity calculation, you need the average salary, right? You need the average salary, you need the number of years the employees would be working. You also need the retirement age, you also need the discount rate, you also need the increment rate, right? Everything. So whatever assumptions they have taken, whether they are appropriate or not. For example, in India, if the discount rate that is generally going on is say 10%, okay, and you have considered 25% of discount rate, then we will be asking the question that whether that discount rate is appropriate or not. Okay, I hope this is clear. Then review reasonableness of conclusion. When I say reasonableness of conclusion, what do I mean by it? Review reasonableness of conclusion. What do I mean by it? Review reasonableness of conclusion. What do I mean by it? See, what happens is whenever we talk about reasonableness of conclusion, whenever we talk about reasonableness of conclusion, what we try to do is we try to understand that whatever conclusion you have driven, whether that is at par with whatever assumptions, whatever methods they have followed. Okay, although we are not the experts of it, so we might not know it. Now when we talk about component auditors, so this is something that we have already covered in group audits, and this is not relevant for your AA subject. This is only relevant for your AAA subject. Using the work of component auditors, this is specifically not covered as part of your AA syllabus. This is only covered as part of your AAA syllabus. Now if you have any questions, please feel free to let me know. If you have any questions, please feel free to let me know so that we can move further. But now we will be taking a 10 minutes break and then we will be moving further. Before that, I really want you to ask all the questions that you might have till the concept that we have covered so far. Any questions on quality management or professional appointments or audit procedures and evidences or using the work of others? Anything that you would like to discuss? After this, we will be going for communicating with TCWG, audit related and assurance services, review engagements and related services, prospective financial information, forensic audits, sustainability information and audits in public sector. These are the topics that we are going to take up after the break. Yes. So any questions in the completed topic so far, please let me know. Please let me know. Okay. I hope there are no questions. So let's go for a 10 minutes break now. Thank you. Okay, so now we are back, and now let's come to the next chapter, which is communicating with TCWG. TCWG is those charged with governance, right? Those charged with governance, people with ultimate power and responsibility of the company, people vested with the powers to set the strategic direction of the company, all of these things, right? Now, what matters you need to communicate? See, there is a lot of discussion that has been done on this, but what is more important here is to discuss that what are the matters that you need to communicate. What are the matters that you need to communicate? That is very, very important over here. Matters that you need to communicate, right? So, what are the matters you need to communicate? Do you need to remember this? Yes. This could be asked as a direct question also, so this is something that is very, very important for you to understand. So please remember it, that what do you need to communicate with those charged with governance. I hope this is clear. Okay, now what are the things you need to communicate? Significant risk. When I say significant risk, what do I mean by it? Significant risk identified in the audit. Significant risk identified in the audit. Significant risk identified in the audit. Okay, so what all are the significant risks? You need to communicate it with those charged with governance. Then significant findings in the audit. When I say significant findings, what do I mean? That is the observations that the auditor has made. Observations definitely goes without saying are the negative observations, right? So whatever findings you have, you need to share it with those charged with governance. Then uncorrected message statement. See, what is the process? You identify the message statements, you share it with the management to correct it in the financial statements. Management either accepts it or management either refuses it. If management refuses and it is a material message statement, then you need to communicate it to those charged with governance. So I'll tell you when. Identify message statements. Identified message statements needs to be communicated to management, and if management does not correct it, then it needs to be communicated to those charged with governance. Okay, now independence issues, whatever independence issues that auditor might have. Whose independence issues? Auditors independence issues. Whose independence issues? Auditors independence issues needs to be communicated to those charged with governance. Then planned scope and timing of the audit. Planned scope and timing of the audit, not the actual scope and timing, whatever is decided at the planning stage, that needs to be communicated to those charged with governance also. Okay, and then difficulties encountered during the audit. Difficulties encountered during the audit. All of these things needs to be communicated to those charged with governance. Okay, form of communication should be written for PIEs. For others, it could be written as well as oral. Okay, for others, written or oral as per preference. Okay, as preferred or as agreed. As agreed. Okay, now time for communication, that is important. When to communicate, this is important. When to communicate, right? When to communicate. So you should communicate in a timely manner. That is important. You should communicate when? You should communicate in a timely manner. Okay, this timely manner would be decided based on professional judgment. You need to decide based on professional judgment what should be the appropriate timeline to discuss a particular fact. I hope this is clear. Now let's move forward to the next part, which is audit related and assurance services. Now we will not be investing a lot of time. Okay, these are all very basic and important very less important chapters. So what you should have a greater understanding of how the auditing profession works, and we have already discussed it in a lot of times that how audit is different from review or other engagements, right? So audit related and assurance services. So review engagements, when we talk about the review engagements, one very important point here is that we discuss in ISO 200 standards, the basic standards, we discuss about the limited assurance engagement and the reasonable assurance engagement, right? So there are three types of assurances that are given. When I talk about assurances, so there are generally three types of assurances that are given: reasonable, because absolute is not possible. 100% assurance is not given. Reasonable, limited, or no assurance, or no assurance. Okay, generally let me give you a brief of it so that then we can go ahead and discuss about all of these things. Okay, so when I talk about the reasonable assurance, this is generally given for regular engagements, the audit engagements. This is given for audit engagements. Okay, then this is a positive form of opinion, that is we write in the report that we have verified the elements of financial information or items of financial statements, we have performed the procedures, and we make sure or we disclose that it represents true and fair view, right? Whereas in limited assurance engagement, first of all, it is applied for review engagements. What are review engagements? Where only limited procedures are performed on a quarterly basis. What all two procedures are there? So there is inquiry and analytical procedure that we perform. Just inquiry and analytical procedure. ICAI ORR is there. So just first I, which is inquiry. Confirmation is not possible on every quarterly basis, so that is why it is not performed. Analytical procedure is performed, then inspection, no inspection is done, no observation is done, no recalculation is done, and no reperformance is done. Just two, inquiry and analytical procedures. The type of assurance or the type of opinion that is issued is negative opinion. When I say negative opinion, that is auditor writes that nothing has come to our attention which makes us believe that there could be material misstatements in the financial statements. There could be material misstatements in the financial statements. Nothing has come to our attention to believe. Okay, that is limited assurance. And no assurance, that is only agreed upon procedures are done. Only agreed upon procedures are done. Only agreed upon procedures are done. That is important. That is important to understand. I hope this is clear. I hope this is clear. So review engagements are there. Okay, I hope it is clear. I hope it is clear. Yes, I hope it is clear. Perfect. Now limited assurance. So review engagements has limited assurance. Procedures includes inquiry and analytical procedure, that is ICAI ORR, C is cut, I is cut, O is cut, R is cut, and again R is cut. So I and A are there. Inquiry and analytical procedures are only there. What is the word that we use? So nothing has come to our attention which makes us believe that there is no true and fair view. Opinion, negative opinion is issued. That is this word is used. Nothing has come to our attention. Okay, then there is agreed upon procedures. Agreed upon procedures, just like corporate governance report. Example, corporate governance report. In case of corporate governance, sometimes what happens is the engagement is received just to verify that whatever information has been written in the corporate governance report, whether that is factually correct or not. So for example, it has been written that the auditor's fees is say $5,000. Okay, so whether that $5,000 is appropriate as per the engagement letter or not. So there would be one procedure that would be agreed between the practitioner as well as the management, that practitioner would do what? Practitioner would just verify from the engagement letter whether the fees that has been mentioned in the corporate governance report, whether that is appropriate or not. So this is agreed upon procedures report. Okay, no assurance is given because we are just following the procedures that has been agreed between the management and the practitioner. And factual findings are only mentioned over here. Here only factual findings are mentioned. I hope this is clear. Any questions so far? Please let me know in the chat box. If there's any question, please feel free to let me know in the chat box. If there is any question, please feel free to let me know in the chat box. Yes. If there's any question, please feel free to let me know in the chat box. Right? Any question? Okay, no. Now review engagements and related services. This is also similar to what we have already studied, but this is driven by ISRE. What is ISRE? International Standards on Review Engagements. 2400 and 2410. Sir, are they part of our syllabus? Yes, these are part of our syllabus. ISREs, right? ISRE 2400 and 2410. So this again has limited assurance and less evidences than audit as only inquiry and analytical procedures, as only inquiry and analytical procedures are performed. Okay, therefore lesser audit evidences are also available. Now key differences from audit, like we have already discussed, no TOCs are there, no TOC. TOC as in what? TOC as in what? Test of controls. No test of controls is conducted. It is just like review engagement, no? So no test of controls, no substantive test, only inquiry and AP, that is analytical procedure. AP stands for analytical procedure. Okay, no substantive test as in no inspection. Okay, then negative assurance is given, that is nothing has come to our attention. Negative assurance, that is nothing has come to our attention. Nothing has come to our attention. I hope this is clear. Nothing has come to our attention, which makes us believe that there could be material misstatements in the financial statements. I hope this is true. I hope this is understandable. I hope this is understandable. There's no query, right? I hope this is understandable. There's no query so far. Yes. Yes. Okay. Now, and first of all, apologies for my voice if there's a little glitch as well, because I am feeling a little unhealthy regarding a throat problem. So if there's any concern regarding the voice, please bear with me. Please, really sorry from my end. Now, prospective financial information, PFI. Prospective financial information, PFI. Prospective financial information. Now this prospective financial information means what? Financial information of the future. Financial information of the future, right? Whenever we discuss about the financial information of the future, there could be two possibilities. That is, either we are using the past data to figure out what could be the future, or we are making certain assumptions and we are using it. For example, in my company, if the turnover is say in first year it was 10 lakh, in second year it was 20 lakh, in third year it was 40 lakhs, and in fourth year it was 80 lakhs. So the revenue is increasing by 100%. So for the next year, I could have a reasonable expectation that the revenue could go somewhere for 1.5 crores, somewhere up to 1.5 crores to 1.6 crores, right? Now this is very important to understand that this particular projection, this particular thing has been done on the basis of my best estimate of the past data, right? However, if I talk about certain assumptions, for example, if I am launching new business also, along with ACCA, I am also launching CA classes, okay? Now, since I am launching new business, I am thinking that if it has went up by 100% in the past years, it should be going up by say 150% for this year, because we are also launching a new business also, right? So that's very important. So prospective financial information could be based on past data as well as the future data. When it is based on past data, it is called as forecast. That is, we are forecasting. That is, we are using the past data and we are forecasting for the future. Whereas if we are taking the assumptions, then it is called as projection. Okay, forecasting, best estimate. Example, using past data to forecast the future performance. Whereas when we talk about projection, that is hypothetical assumption. Example, using assumption metrics to project the financial information for a project. For example, you might have heard of a thing called project report, right? Project report. When I say project report, it is the projection. So it is based on assumptions. It is never based on the hypothetical data. It is never based on the past data. It is always based on the hypothetical data. That is why it is called as a project report. It is called as a project report because it has projections, not the forecast. Although in general English we use these words projection, forecast interchangeably only, but that is not true. These words are very different from each other, and we need to understand the importance of these words to understand that what value it carries. Okay, so forecast and projection. Forecast means what? Best estimate, that is using the past data to evaluate the future performance. Whereas when we talk about the word called projection, it means taking hypothetical assumptions to evaluate the future performance. Okay, now what are the practitioner responsibilities? Why not auditor? Because here we are not auditing. Practitioner, not auditor. That is the word that we need to understand over here, that we are talking about practitioner and not auditor. Okay, so auditor needs to evaluate what? Evaluate assumptions. If you are taking the assumption, then auditor need to evaluate assumptions. That is whether, that is whether assumptions are reasonable, whether assumptions are reasonable or not. Okay, whether assumptions are reasonable or not. Then evaluate basis of preparation via evidences. Evaluate basis of preparation, that is obtain evidences, that is obtain evidences to check whether basis of preparation is appropriate or not. Then check mathematical accuracy. Check mathematical accuracy, that is recalculation via recalculation. Example, recalculation procedure should be conducted. Recalculation procedure, if you agree with all of their criteria, everything, okay, still you can have a discussion on whether the mathematical accuracy seems appropriate or not, whether the mathematical accuracy seems appropriate or not. That could also be a matter of a question, that could also be a question that could be raised over here. Now the report will have limited assurance. Limited assurance as in what? That is negative opinion. Limited assurance as in negative opinion should be there. See, limited assurance, negative opinion should be there. I hope this is clear. I hope this is clear for prospective financial information. Just in case if you have any doubts, please feel free to ask me right now. I'm waiting for a minute because I feel that there might be a 30 seconds glitch or a waiting period. So yes, please feel free to write all of your queries on the chat box. If you have any queries, please feel free to write on the chat box. My friends, now we have even taken a break just for the purpose that you should be able to understand everything, right? Because we were covering a lot of content. So yes, I'm expecting little responses from all of you. Okay, prospective financial information. Now, not a lot of topics are pending. It's just forensic audits, sustainability information, and audit in public sector. Once we complete these 3 topics, then we will be in a position to complete the entire entire revision of AAA syllabus. That is very, very important for all of us. And imagine that in somewhat first session was of 2.5 hours, second session was again of 2.5 hours somewhat, third session is of roughly 1.5 hours. As of now we have completed 1 hour 80 minutes and we should be able to complete in next 10 to 15 minutes. So in that 1.5 hours, that is total 2.5 plus 2.5 plus 1.5, that is around 6.5 to 7 hours we have completed everything as committed, right? So that is very, very important for all of us to understand that we have completed everything. Now if you have any questions, please feel free to reach out to me. Okay, please feel free to reach out to me. Please try to understand this particular thing very, very importantly. Now forensic audits. Whenever we talk about forensic audits, first thing that comes to in our mind is, what is the meaning of forensic audit? Is it just a fraud investigation? So no, my friends, this is not a fraud investigation. First thing that you need to understand is, what is the meaning of this word forensic? The technical meaning of this word forensic is acceptable in a court of law. Acceptable in a court of law. When I say acceptable in a court of law, what do I mean by it? Acceptable in a court of law, what do I mean by it? See, what happens is, whenever we talk about forensic audit, what is the meaning of this thing is that whatever audit we are conducting, the report is going to be submitted to the court, and the court is going to make their judgment about this particular report and they are going to use it as an evidence. That is the forensic report. That is a report, an audit report which is conducted, or an audit which is conducted to be acceptable in a court of law, in the criminal proceedings, in the legal proceedings. Then that particular audit is called as forensic audit. I hope that is clear. That is, this forensic means acceptable in a court of law. Forensic audit is an audit which is conducted for the report to be submitted in a court of law for legal proceedings. Okay. Now, Is it just fraud? No. Does it include fraud investigation? Yes, definitely yes. So generally forensic audits are conducted when there is a fraud. So for example, if a company has committed the fraud and the shareholders are defrauded and there is a investigation that needs to be done, then for that particular point the forensic audit is conducted. Okay. Forensic auditors are certified accountants only. Yes, they are certified accountants only. Okay, they are certified chartered accountants, chartered certified accountants only. Okay, that is very, very important for all of us to understand. Okay, so forensic audit. What are the objectives of it? Investigate fraud, generally investigate fraud, quantify loss, that is investigate fraud, that is evaluate the, or not just evaluate, understand and evaluate fraud, quantify loss, that is identify and calculate the amount of impact of a fraud. Okay, then provide expert evidence, expert evidence as in testimonials, that is testimonials in a court of law by acting as an expert witness, Okay, see what happens is whenever there are forensic auditors, okay, so their reports are going to be read in a court of law, so definitely that might include certain interpretations, certain judgments, certain cross questionings also. So all of that is covered in the questioning. Okay, so testimonials in a court of law by acting as an expert witness. Okay, now main characteristics, this is important. Main characteristics, what are main characteristics? No materiality. Main characteristics as in what? No materiality. Main characteristics as in what? No materiality is there. Okay, no materiality, that is any item could be material. High professional skepticism, because that is a fraud case that they are investigating, right? What could have the more professional skepticism than this particular engagement, right? So they have to raise the questions everywhere. Now evidence must be admissible in court, because this particular audit is conducted to be admitted, or the report needs to be submitted in a court of law. So evidences must be admissible in a court of law. Now let's talk about common procedures. So digital forensics is done. Now this is one technique. Is it part of a AAA syllabus? Definitely not. Okay, digital forensics is done. That is, there are certain tests which are done in the forensic manner. Interviews could be conducted of the relevant parties. It could be of management. It could be of any related person. Okay, interviews of what? Interviews of management or any related personnel. Okay, any related personnel of the fraud. It could be vendor also, in fact. Document review, in fact they have the power, in fact they have the expertise, for document authentication as well. That is, whether or document is authentic or not, they have the technology to test that also. In audit, do we have that? No, in audit we do not have that. We have to take things for the words of the management. As the management submits, we have to evaluate it in the similar manner, but here they have the power to raise questions on that, and even they can verify the authenticity of a document as well. Data analytics, that is, they can convert the raw data into actionable insights for the purpose of their evaluation. So for example, what they can do is, they can take up any raw data that has been submitted by the management, they can convert it into actionable insight, and then they can raise question that why such an action has not been done in a particular case. Okay, now conversion of raw data into actionable insights. We have also discussed about a lot about it during a planning discussion, right? Conversion of raw data into actionable insights. This is very, very important for all of us. Now, sustainability information. Why is this very, very important for us? Sustainability information. See my friends, this is kind of a new addition which has been done. You can check your SBR syllabus also. There are new standards that have been introduced in sustainability category, right? Here also sustainability information is very, very important. But whenever we talk about sustainability information, this is a total mindset shift for the auditor. Okay, see, we are those people who generally considers the financial information only, right? We as auditors generally consider the financial information only. For the non-financial part of it, we have just got to know about one thing till now in our syllabus, which is other information. That is, auditor needs to read the other information and see if there is any material inconsistency with the financial statements or not, right? That is the only thing that we have discussed about non-financial information till now, right? But here this chapter talks about something really, really different. When I talk about sustainability information, please try to understand very carefully that it is talking about following the sustainability standards. Okay, what needs to be done? Every company has to be sustainable in the approach, right? There are a lot of laws and regulations and standards that are being created for accounting, auditing and other aspects of it, operational aspects also, which makes a company sustainable, right? Now in this particular case, what is important is how do we need to look for it from the perspective of the auditor. That is very, very important to understand over here. How do we need to evaluate it from the perspective of the auditor? So key issues, what are the key issues? Non-financial reporting, that is subjective and qualitative. That is, this particular category, sustainability reporting, requires non-financial reporting where auditors might not be expert. For example, me as a chartered accountant, you as an ACCA might not be experts on reporting on non-financial parameters, right? For example, I am no one to report. I have no competency, no qualification to report on the carbon emissions of a company. I can only use the report of the people who have submitted their report on carbon emissions of the company, and I could just say in the quantitative manner that too, whether it is above the appropriate level or not. That is all I can do, right? But I do not have any other knowledge for the sustainability. So non-financial reporting is there. That is one issue. Then frameworks. So there are different frameworks. There are not regular audit framework. There are different frameworks. So ISSB and GRI. ISSB as an International Sustainability Standards Board. International Sustainability Standards Board. When I talk about International Sustainability Standards Board, this is the board which has taken care, or which takes care of the sustainability standards both for accounting and auditing purposes. GRI is Global Reporting Initiative. Now materiality. Unlike audit where there is only financial materiality, there is also impact materiality over here. That is, what could be the impacts of the company? What could be the impacts? That is, what could be the impacts? That is, what could be the impacts? What could be the impacts? Okay. Now, audit consideration. Okay, so this is very important to understand that there are different types of materialities available over here. I hope this is clear. Now, audit consideration is very, very important again. Okay, so this is something that is very, very important for all of us to understand. I would suggest this whole standard is very, very important for that matter. Okay, now, so audit considerations, competence in non-financial subject matter. What audit consideration we should have? We should have competence in non-financial subject matter also. That is, now the auditor needs to understand what are non-financial subject matters that might be important for the company as a whole. Because if we do not follow these standards, these guidelines, there might be concerns over going concern also, right? There might be issues in going concern also. So that is why they become very, very important for the auditor as well. Now, KPIs are inconsistent. Competence in non-financial subject matter is not there. That is one audit consideration, right? So that is, auditor might not be competent enough. Auditor might not be competent enough to understand non-financial aspects. Now, KPIs are inconsistent. KPIs are inconsistent. That is, all companies might have different levels or preferences or attributes to measure and compare sustainability information. Right? This is very, very important for all of us to understand, right? Now there is higher reliability on measurement models which could be inaccurate. That is, for example, we have one model by the name of, say, CO2 emission calculator, right? Example, measurement model, example, CO2, let me write this way, CO2 measurement, CO2 emission calculator. Okay, now this is one calculator that we have. Okay, now since we are auditors and we do not have the subject matter knowledge for the non-financial areas, we might have this calculator only on which we will be relying completely, but this might not cover a lot of aspects of the sustainability information also, so this could be inaccurate also. So that is one area of audit consideration, that we will be relying completely on the calculators, on the measurement models, which might be inaccurate. Greenwashing risk. Now this is one important part of it, greenwashing. Just like greenwashing, this is greenwashing. That is what you might be saying, that even when there are a lot of mishappenings that are happening, even if there are a lot of inconsistencies, incompetencies that are being observed in the sustainability information aspect, you might still be reporting the very positive figures, you might still be reporting the very positive actions. So greenwashing risk, that is misrepresentation of data or results, that is very important to understand over here. I hope this is very clear. Audit considerations, I hope this is very clear for sustainability information. Please mark it as one of the most important parts that you need to study, and I would really suggest, like I've done before also, that please complete it from your ACCA study hub and reference materials also. Now let's come to the last topic for today, which is audit in public sector. Audit in public sector, how is it different? A lot of people say that audit in public sector is similar, right? It's just company only, be it a government company, be it a private company, how is it affected? But the concern is different. See, for private company, a lot of times the people who are involving or who are dealing with the auditor might be the owner themselves also. For example, in my company, it is a private limited company, I am the owner, I am dealing with the auditors. Okay, even if it is a listed company, the people who are being appointed by the shareholders of the company, the real owners of the company, they are dealing with the people, right? But in a lot of government companies, you might see that the money that has been invested belongs to the shareholder, belongs to the general public of the country, whereas it has been managed by government officers, right? It has been managed by people who are selected by the government officers or the government people. So there might be different standards that might be required over here. There might be different risk also that might be involved over here. Plus, the most important thing is value for money, that is whether the decision, whether the performance is as per the expectation or not. And that is why, based on this information, based on this audit, a lot of proprietary data, analysis of proprietary data, a lot of decisions are taken whether to privatize a particular sector or not. So this becomes very important. A lot of times the audit head of the country, say in India there is C&AG, Comptroller and Auditor General of India, that particular person, that particular position takes care of the audit of these public sector companies. That is very important for all of us to understand. Now objectives. So there is compliance check, that is whether all laws and regulations are being followed or not, that is whether all laws and regulations, are being followed, whether all laws and regulations are being followed or not. Then three E's, economy, efficiency and effectiveness, whether 3 E's are being followed in the company or not. Economy, affordable, talks about affordability. Efficiency, most quick. Effectiveness, most output oriented. Okay, so this is very important. I have just given you basic words. Okay, you do not need to write it, you only need to write economy, efficiency and effectiveness. This is very important. Now, reporting on public interest matters, that is you have to consider whether, whenever you are reporting, you have to consider whether it is in the public interest to report it or not, whether whatever information you are reporting, whether information you are estimating on your professional judgment that this need not be reported, whether that is in the public interest or not. That is all aspects, of the reporting should be evaluated on the basis of, should be evaluated on the basis of, all aspects of the reporting should be evaluated on the basis of, all aspects of the reporting should be evaluated on the basis of public interest. This is very, very important for all of us to understand. And now, difference from private sector. When I talk about difference from private sector, so it has wider scope, as general public interest is considered. Similarly, more stakeholders are there, as the stakeholders includes whole national and international public. Say if anybody from outside India, say America, wants to invest in India in that particular company, and that company is not working appropriately, so it is an international matter also. Those are also the stakeholders. That is not just about one company now. And then performance audits are common. Performance audits, whether the entity is doing optimum use of resources and whether they are taking value for money decisions or not. This is very, very important. Once we complete this, we have completed audit in public sector also, all the key pointers. So that is something that we have covered. Okay, so this is something that is very, very important for all of us. I would be sharing it with you in the Telegram group also, so that you can have a quick revision. Please go through the Telegram, please go through the ACC study hub as well as the reference material also. And whenever you have any questions, please feel free to reach out to me. Okay, if you want to reach out to me, how you can reach out, I'll just give you certain parameters. So if you want to reach out to me on Telegram, please reach out to me on my channel, which is ACCA with CA Supreet Agrawal. I would suggest you to please join it. I would be sharing these notes plus various other notes and question banks for your preparation. Okay, then Instagram, I am available by the name of ACCA with CA Supreet Agrawal. That is my username, ACCA with CA Supreet Agrawal. Similarly, I am available on YouTube, like you might be seeing. I am available on YouTube also by the name of ACCA with CA Supreet Agrawal. Be it you are in AA, AAA, or I am also launching my law classes really soon. Okay, so if you are preparing for any of these three subjects, AA, AAA or law, I would be the first one you should choose for your preparation. I would be really happy to help you out. And if you are choosing any other subject also, we have full team available with us. Please feel free to reach out to me. I would be happy to connect you to them. Okay, so thank you so much. All the very best for your examination. Just in case if you have any trouble, please feel free to reach out to me. Thank you so much.